Hey option traders, for today's trade, we're looking at trading a cash secured put in Lucid Group. Lucid Group is currently showing a lot of volatility and is up 33% in the last 5 trading days. Implied volatility is sitting at 109%. This is slightly below the highest of 132% set in late October, but it's still way above the 12-month low of 66%. High volatility means elevated option premiums. Traders with a bullish bias could look at using a cash secured put strategy. A cash secured put is basically a slightly less bullish trade than buying the stock outright. It's considered a neutral to slightly bullish trade. A cash secured put involves writing an at the money or out of the money put option, and then simultaneously setting aside enough cash to buy the stock. The goal is to either have the put expire worthless and keep the premium, or be assigned and acquire the stock below the current price. Selling puts is an easy place for investors to start with options. They are very similar to covered calls and pretty easy to understand once you get a handle on the basics. Traders selling puts should understand that they may be assigned 100 shares at the strike price. So let's take a look at LCID and set up this trade. So we're on my Thinkorswim dashboard. To set up this trade, you're going to want to first type in LCID, which is ticker symbol for the stock. You're going to want to select the single spread strategy here if you're on Thinkorswim. And then you're going to want to make sure you're in the December 17th expiration. And right here in the middle, we see the strike prices. We're going to be looking at the 30 strike price, and we want to look at this side of the screen, which has the prices for put options. And down here, we have the trade set up, looking to sell one LCID put with a 30 strike expiring in December. And with the stock trading around $35.50, investors could sell this put for around $2.63. So an investor selling this put would receive $263 into their account, which would be theirs to keep. If LCID falls below 30 by December 17th, you would be required to buy 100 shares at $30 a share. The effective net cost of the position would be $27.45 thanks to the option premium received. That's about 22% below Tuesday's closing price. If the stock stays above 30 at expiration, the put then expires worthless, leaving the trader with a 9.3% return on capital at risk. That works out to be around 77% annualized. The main risk with the trade is similar to outright stock ownership. If the stock falls quickly, then the trade will suffer a loss. However, the premium received will help to offset the loss. The maximum loss on the trade would occur if LCID fell to $0 a share, which would see the trade lose $2,745. And that's the most the trader could lose, but you would probably cut losses before then. LCID does report earnings November 15th, so the stock does have an earnings risk. The bottom line is cash secured puts are a great way to generate a return on strong stocks, potentially without ever having to take ownership. If the put does get assigned, the investor takes ownership with a reduced cost basis and can potentially begin selling covered calls to generate additional income. If you're new to options, make sure that you practice with a virtual trading account before risking any real money. And always remember that options are complex and investors can lose 100% or more of their investment. And be sure to check out investors.com/options for more option trading tips.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.